Hello everyone, just doing a quick sound and video check. Can you all hear me and see me? Dimitri, can you confirm if we are successfully live? Okay, super. All right, I see the comments coming in. All right, so in a second I will start officially. Everyone, welcome to session 1 of MOOC 14, Introduction to Digital Currencies. I am Antonis Polemitis. I am one of the co-instructors of this course, and I am delighted to be with you here this fall. In today's session, before we get into the material for this session, I'd like to cover some more general material about this course, about our objectives for the course, a little bit about the University of Nicosia, a little bit about our students who are in this course. So I'm going to do some course logistics at the beginning, and then after we handle the course logistics, we will get into the substance of today's session. This is the 14th running of this course. It was the first university course on the topic of cryptocurrency in the world, and it is still one of only a handful of university courses in this topic area. You are still, I believe, in a very early group of early learners, early adopters of this field. Even in 2020, a very, very small percentage of the world population has any understanding whatsoever about cryptocurrency and blockchain, and a very small set of that group has anything other than a superficial understanding or a superficial and incorrect understanding of the topic. So if you go through this whole course over this fall and go through all 12 sessions and study and learn what we cover, you will have a highly elite, relative to the world population, a highly detailed understanding of this topic area. So we're still very, very early in cryptocurrency and blockchain. You are still very, very early just by virtue of being here. I believe the course in general, not probably the largest ever in this space. We've had close to 40,000 students in its history attend this course. And we have another big group this fall and another globally distributed group this fall. And so I was looking at the top 10 countries in the group: US, Nigeria, India, UK, Greece, Canada, Australia, Spain, Cyprus, and Germany. And so it's global big countries plus also Cyprus, because the University of Nicosia is in Cyprus. There are 2,470 students enrolled in the course. I would like to thank the 47 of you who have taken the pre-course survey already, so we can have these statistics. We are at an 80-20 male-female ratio, which, while I would hope we can get even a higher percentage of women in the course, for the cryptocurrency space is actually significantly better than average. There are over 100, there are exactly 100 current countries represented in the course, and 2/3 of the group are working professionals, and about 1 in every 6 are current students in some form of education. And among the working groups, it's split reasonably normally. About 40% classified themselves as entry level, 47% as mid to senior level, and 13% as executive level. So we have all levels of the corporate hierarchy represented in the group, as well as the students and folks that aren't in either of those two categories. For those of you who don't know the background of both this course and the University of Nicosia and the University of Nicosia specifically with cryptocurrency and blockchain, I think it's helpful for me to take a couple of minutes to explain how I got here, why we're here today. There was a small group of us back in 2013 at the university who, in 2013, it was just Bitcoin, right? Ethereum was not yet launched. No one had thought about corporate blockchains. We were really just talking about Bitcoin at that time. And we had looked at it, we had studied it, and we decided this wasn't just some strange experiment, but an actual breakthrough in distributed systems, in computer science, and a breakthrough that was at an order of magnitude as important as the internet. That it wasn't just a strange token that was internet funny money, as some people thought, or a big bubble, as other people thought, or just a way to pay for objects on dark markets, as other people thought. But this was the beginning of a broad technological and ultimately societal and social revolution, that you were able, in the same way that the internet has allowed us to decentralize and distribute information, that cryptocurrency and blockchains of various types will allow us to decentralize and distribute trust and value. And our assessment was that this was a very big topic, a very important topic, a multi-decade topic, a change the world type of topic. And the University of Nicosia was the first university in the world to come and say, well, this is an important topic of scientific study, and I'm going to offer a course, this MOOC, the first ever offered, a master's degree, the MSc in digital currency and blockchain will be its variation in a few weeks. The first to publish academic certificates on the blockchain, the first to accept Bitcoin for tuition, and the first to start building an academic and admin team in this field. And today I think we have the largest group and community in this field, both with alums of all the various courses, both in terms of faculty and staff working in this area. There's a large group in our School of Business, in our Institute for the Future, that is focused solely on cryptocurrency and blockchain topics. We are highly involved in a lot of the major global research initiatives in this field, along with other good universities in this space. And most recently, there was another validation of the caliber of this team, a consortium in which we are the academic institution, in which we are the university, won the tender for the European EU Blockchain Observatory and Forum, which is a 30-month project for the European Commission, that it is an advisory and outreach body oriented around blockchain strategy for the EU. And we are leading the academic university piece in that area. So I think it is fair to say the team has a tremendous amount of experience in this area. It's a very good team. They've had a lot of accomplishments. They have a great track record. There's a lot of them, and there's a big community. And so we're very proud of that. We are very proud of our community, and we have a very, I think, a set of warm feelings with our community. It's been building for over 7 years, and so regardless of however your pathway takes you in this course and in the future, we'd like to welcome you into the University of Nicosia community in general, and into the cryptocurrency blockchain community specifically. So I'll discuss in a little bit different ways you can remain engaged with the university over time, but you should definitely feel that you're now part of our extended family even from today. The University of Nicosia, and I won't spend long on this, is the largest university in Cyprus. We have about 13,000 students in degree-seeking programs. We're a comprehensive university. We have 6 schools, 20 academic departments, about 100 degree programs. We run a fairly comprehensive campus here in Nicosia. Probably our best known program on campus is our medical school. There's 2 programs of our medical school that we run in partnership with St. George's University of London. Those are quite popular programs for international students. And then we're also quite active in online education, primarily at the master's level. So which is where this program is as well. We are ranked among the top 300 universities in Europe, among the top 1,000 in the world. That puts us somewhere in the top 3 to 4% of universities globally, and then in some areas in business and medicine, and then of course in cryptocurrency, we're at a much higher level. So just a little bit about the university. Now, we have 2 co-instructors in this course. The first, for the large majority of you, will need no introduction. It's Andreas Antonopoulos. For those who don't know Andreas, he has probably been the most important evangelist and influencer and technical writer in the cryptocurrency space the last 7 years. He wrote Mastering Bitcoin, he wrote Mastering Ethereum. These are reference textbooks in this field. He has given thousands and thousands of speeches, seminars, workshops over the years. I'm not sure if over the last 7 years there's anyone who has done more to bring people into the space than Andreas. He has been teaching this course with me from the beginning, and the next 6 sessions after this one will be with Andreas. So Andreas is going to handle the more technical aspects of the course. Andreas will handle how to set up a Bitcoin wallet, for example. And I know we're going to have folks in this course with different profiles, some non-technical at all, some slightly technical, some more technical. The course is going to be both non-technical and technical. That's the objective. And I encourage everyone to work through both parts. The course works better as a whole. And so it is important to do the technical work, even if, and it's not something, you do not need a degree in computer science, right? Like it's not that type, you're not going to be doing programming. But it's important to not just hear one of us lecture about how a Bitcoin comes from here and goes to there. It's important that you actually try it. And it's also important, though, the flip side, some folks like that part, and then when we say, let's talk about regulatory topics, which it always saddens me because it's always the least attended session, and I think it's one of the most important sessions. And why is it one of the most important sessions? Because if you want to do anything with cryptocurrency in the real world, these are real topics that you have to address. You can't ignore them. This is both a technology, but it's a technology that touches upon many areas of human society, and as such is regulated in many ways by different parts of government. And so many folks have gone wrong over the years by making certain mistakes over the years, and it's come back to bite them. And so it's important, not that anyone's going to become a regulatory cryptocurrency attorney, I'm certainly not that, but having a base level understanding of where regulation might be an issue, I think is important. So I encourage everyone to go through the whole course. I encourage everyone to go through the technical pieces and through the non-technical pieces. My other co-instructor is Professor George Giaglis. George was one of the team that helped set up the program in the beginning, along with me. He was running possibly the first blockchain lab in the whole region back in 2011. He has vast experience in cryptocurrency. He is the head of the Institute for the Future, which is our research institute that touches upon these topics. He's taught many other courses in the program, including some of the harder ones. This time, we're welcoming him also to the MOOC, so this is going to be a lot of fun. It's the first time he's teaching in the MOOC with Andreas and me, and so he and I are negotiating which sessions we're going to do on the back end of the MOOC, and so once we know the next 6 sessions in any case are Andreas, and then there'll be 5 sessions left, and when George and I finish our negotiation, we'll announce who will be teaching which piece, but he's wonderful, knows the topic inside out, backwards, and upside down, and so I think you're going to enjoy his sessions as well. Briefly about my background at the University of Nicosia, I am on the administrative side. I am the CEO of the university. It means I'm responsible for the administrative operations. There's a rector, Professor Giaglis, who's responsible for academic administration, and a president of the council, who's like our chairman of the board, Professor Giaglis, who is responsible for governance, and I'm responsible for some more practical items, like on the administrative side of the university. My background is in private equity and venture capital and some management consulting and some technology startups. And so if you averaged my pre-University of Nicosia background, it is a mix of finance and technology. I spent my whole professional career until 2016 in New York City and Manhattan before I moved to Cyprus to take on this role. So you can kind of see now the connection that very early on I looked at this and I played around with it a little bit, and I could see the technology aspect, and I had some sense of how the financial system worked, traditional financial system, and I was able to make some of the relevant connections. And so that's my background. And as such, you'll see me discuss some more what I consider practical real world topics of how this does end up interacting with the real world and what might it mean and what could happen. Because theoretically many things could happen with various cryptocurrencies, but practically making them happen is often a different story. I would like also to introduce Dimitris Tseas. You've probably interacted with him already in Moodle. He is the course administrator. He makes sure that the course runs correctly. He makes sure that George and Andreas and I are in the right place at the right time. And so whatever you need from Dimitris, please reach out to him. For me, my recommendation is the following. I'll say 3 items. 1, I will do my best to answer questions, but probably the order of likelihood of them getting answered are A, put them in the weekly questions, then Dimitris will give them to me and I will try and answer them in our live session. So that's one way. The second way is ask Dimitris to ask me. And then the third way, I'm quite active on Twitter and sort of active on LinkedIn. By all means, if you'd like to follow me there, I will try and reply. Those are probably 1, 2, 3. Everything else, like sending me an email, starts getting less likely that you're going to get a response. Just not because I don't mean to, but I get a very large number of emails. So, but the whole team is here to support you, including, again, in the first level, Dimitris, who is wholly dedicated to this course. So consider Dimitris your main and first point of contact to ensure that whatever you need to happen will happen. Now, the course itself, as I mentioned, is 12 sessions. After each session, there will be a quiz, a weekly quiz. These are multiple choice. There are 20 questions. There's no deadline. There's no time limit. They don't count towards your final grade, but we encourage you to do them because they're a way each week to ensure you have understood the material. And you can retake them if you need to. Think of them not as a quiz where we're checking in on you, but as a tool for yourself to confirm that you have understood the material and see where you might need extra help. So think of it as a tool for you. There's also a final exam, and the final exam breaks into two pathways. If you are not going to subsequently enroll in the MSc Digital Currency, you can take the final exam through the course pathway for the Certificate of Accomplishment for the MOOC. Meaning that is a multiple choice quiz. It is 50 questions. You have to get 30 of them right. So this one you have to pass. This is not just a tool for self-evaluation. And it will be on the 7th and 8th of December. You'll have a 3-day window. I don't know if this one says 7th, 8th, and 9th. And you will have a 2-hour period during that time frame. So you can pick your 2-hour period because people are in different parts of the world, but you have to get it done during that 2-hour period. If you receive at least a 60%, the University of Nicosia will give you a certificate of accomplishment. It's a nice looking PDF, but with an exciting extra feature that it will be published to and validated to the Bitcoin blockchain for eternity, or at least a quite long time, so long as the Bitcoin blockchain is around. That's based on the technology we had developed initially here at the University of Nicosia that is now a firm called Block.co. It's spun out into a broader credentialing firm, but it's really interesting. It is a native to the most decentralized blockchain solution, and so anyone in the world can validate that that certificate is genuine, it came from us, it has your name on it, you have your score on it, and so on. It's interesting, people have gotten great value out of these certificates. I know of people who have gotten jobs based on these certificates. We had an alum that based on the certificate, he was actually a refugee in the Netherlands from Syria, and based on the certificate he was able to get a work permit. Based on that work permit he was able to work. Based on that he was able to complete the MSc here and now has his own startup. So the certificate also in and of itself is a very interesting and exciting tool that shows a level of interest accomplishment in this area. Now, at the next level is the MSc in Digital Currency. This is arguably the best known, deepest, broadest, largest student community academic degree in the world in cryptocurrency and blockchain. A lot of people from a wide variety of backgrounds have enrolled and or graduated from the MSc in Digital Currency at the University of Nicosia, and some of them have gone on to very important roles in the field, either in existing companies or as entrepreneurs. Who is this for? Again, it can support a variety of pathways. I think it is for both mid-career professionals in certain fields. They could be in technology, they could be in the law field, in the accounting field, the auditing field, at a central bank, at a securities regulator, who realize that this is an area that is going to become progressively more important, realize that on the whole, companies and organizations don't have the internal capacity and skills in this area, and so the person who becomes the expert in this area tends to become more valuable, right? It tends to be a good career move if, when in any of these types of organizations that I mentioned, someone comes and says, yeah, no, I can answer those questions. Like, this is an important topic. So that's one bucket. I think a second bucket is those with a more technical orientation, who might be in either a software engineering role or a product manager role, either clearly in a crypto blockchain company or in a type of company that might be adjacent to it. The third bucket is entrepreneurs. We have a lot of those. I think this is probably the most entrepreneurial group at the university, the students in this program. And then there's an additional program, separate program altogether, that is for the hardcore software engineering aspect, which is an MSc Computer Science with a concentration in blockchain. Now that one is technical. That one's all technical, and that's for a slightly different profile. But if you're interested in any of these programs, it would be good to have the discussion now at the beginning, because there's certain procedural steps we need to take now to allow this course to count for credit for you without you having to redo it. So please speak to Dimitris or Hazal, depending on who you've been interacting with, and so we can make sure we have organized you correctly on our own administrative side. It doesn't mean that you couldn't decide later or decide at the end of the course that you later want to do it. We will still be here, but it might just add an extra step for you later. Beyond the MSc, there's a few other things that you could keep in mind as ways to interact with us. We do have certain academic certificates that are about a third the length of the MSc and stack up towards the MSc. So those would be 3 courses instead of 9 courses. You receive an academic certificate, not like these, not like the course, a more extensive one, and those courses also count towards the MSc if you want to go ahead and complete the MSc. We have some shorter form professional certificates in specialized area. So for example, we have an intensive 6-week regulatory course taught by Jeff Bandman, one of the top crypto blockchain regulatory lawyers in the world, who's one of our instructors. Those courses are not introductory level courses. So if you're in this MOOC, but you also have a higher level of knowledge, they might be relevant even immediately. Otherwise, those are probably next step or later step type courses. We have that we call the Decentralized community. These are chapters around the world of people who are interested in these topics on decentralization, blockchain, cryptocurrency, and so on. I believe there are now chapters in 35 cities worldwide. Again, if you can reach out to the team, we can share with you where the existing chapters are that you might want to join, or if you have a group of at least 8 folks who are interested in this topic area, you can apply to form a chapter in your city. And I think this is great. The chapters do both local activities. It lets people meet with other people who are excited and engaged about this topic, but also they do some global network activities. So we sometimes stream the speakers of a certain chapter around the world to all the other chapters because it's an interesting speaker. So if you want some more day-to-day engagement beyond the course, see if there's a local chapter near you, or if there isn't, work with us and we can help you spin one up. Under normal non-COVID conditions, I would have said our 4th decentralized conference would be happening in a few weeks here in Cyprus. It's happened once in Cyprus and twice in Athens. This year, unfortunately, due to COVID, we decided it wouldn't be prudent to have a physical conference in November. We have rescheduled the physical conference for next year, fall 2021, and I certainly hope that by then we're not worried about COVID-related topics. In the interim, instead of having the full conference, we're going to run something called the Decentralized Learning Series, which are a series of workshops, panels, seminars of the type we would have at the conference, but maybe once a month we will run them and do them online. So keep an eye on the mailing list, keep an eye on our Twitter accounts, keep an eye on things that we're up to, and you can maybe join some of those sessions, and we hope to see you in person next fall when things are hopefully back to normal. Okay, I think that's what I have on. Oh, I have one more thing on course logistics. I forgot. For the 30 highest scores on the final examination, George has informed me we'll be providing a 10% scholarship towards the MSc if one continues to the MSc. So that is just an extra incentive, not just to pass the course, but to do well in the course. Okay, with this I am going to switch to answering some of these questions that I have here. First, Demetrius has suggested I comment on the student poll choice of which function of money does Bitcoin satisfy the most, and we have the three major ones: medium of exchange, store of value, and unit of account. And we have last spring's and last fall's data. And interestingly, the percentage of medium of exchange has gone up. So it was 47 last fall, 43% in the spring, 51% this fall. The percentage of store of value has remained basically the same, 43, 46, and 43%. And unit of account has gone down 8%, 8%, 4%, and 2% say none. There is no function that Bitcoin satisfies. It's interesting. I would have expected that if you look at the discussion in the community, it is a lot of the discussion is like, wow, it hasn't really taken off as a medium of exchange, but it is an interesting store of value. And relative to where we were 6-7 years ago, when there was a lot more discussion of, well, couldn't we be paying for our coffee with Bitcoin, right? Couldn't we do retail payments? Couldn't we do these types of things? And for a variety of reasons, in some countries, tax reasons, the medium of exchange use has been hindered. I think the two reasons are, A, it's appreciated. So a lot of people have said, well, why should I spend this? I'm going to keep it. But second, even if you said, well, I'm going to keep some to save, but also have some to transact, in countries like the United States, where every transaction is a taxable event, it's kind of a nuisance. Theoretically, every time you bought a coffee with a Bitcoin, you come to see, when did I buy those Satoshis and what price am I selling them? And say, do I have a capital gain or a capital loss and file it on my taxes? Well, frankly, that's a nuisance. And I think that has been a deterrent to some of these medium of exchange uses. But it's interesting to see that the two main buckets are still in similar proportions as the past. I think unit of account, we're not there yet. I have not seen too many real world goods priced primarily in Bitcoin. You'll see once in a while on a bulletin board or a strange exchange site, someone will say, I'm selling this house in Costa Rica and I'm selling it for 500 Bitcoins or something. But I think those are a little bit more publicity oriented exercises than the fact that Bitcoin is primarily a unit of account today. Okay, first question, it came from two folks, which is, can BTC's fixed supply be more than 21 million? Specifically, can the fixed supply of BTC of 21 million increase in the future if such a change can be brought in by consensus? What are the wild possibilities of such a consensus to happen? Won't the 21 million cap lead to deflation in the future if Bitcoin use increases? Okay, so these are good questions. These are good questions, actually. Sorry. Quiet. Thought I had my volume off. Can the supply change? Yes, theoretically, yes. Like theoretically, everyone could decide that what everyone agrees is called Bitcoin now has 22 million tokens instead of 21 million tokens. Do I think that's likely to happen? No, because I believe there is a significant group in Bitcoin that considers the one unalterable holy aspect of Bitcoin to be that 21 million cap. And so I think the odds that you'd get a broad consensus on this topic are low. I think there would be, if a group came and said, no, we think it should be 22 million, 50 million, 100 million, what would end up happening is you'd have a fork, as there have been many, many forks of Bitcoin over the years, where people had different views about different topics on how Bitcoin is structured. And there you had, Bitcoin Cash and Bitcoin ABC and Bitcoin Satoshi's Vision and many other forks that no one even remembers. So I suspect what would happen under most conditions I can imagine is if a group thought the supply should be raised, it would end up forking off Bitcoin, because there is a quite dedicated, motivated set of people who consider that to be kind of the core characteristic of Bitcoin. And unless it was absolutely necessary to make it function, are not likely to be in favor of changing that. So I think that covers what would happen. I think what would happen is there'd be a fork. Now, there's a question here which is a common question. What about deflation? And what this question means is the following. If you're running a national currency, a national unit of account, some modern central banks target a small amount of inflation. They don't want a high amount of inflation because it's disruptive, right? If every day your currency lost a lot of value, people start doing some not very productive things with their money just so it doesn't lose value. But why do banks go for 2% inflation? Why do central banks aim for 2% inflation but not 2% deflation? Why do they want money to lose a little bit of value every year? And the answer is they're afraid of a deflationary spiral, because a deflationary spiral is actually hard to break. And what do I mean by that? Let's say I was 100% certain that I'm going to buy a car, a house, tomorrow will be a little bit cheaper. I might say, oh great, I'll wait until tomorrow. But tomorrow comes along, and when I hit tomorrow, I know the next day it's going to be cheaper. So I wait another day. And I mean, that's fine, of course, at my level. But what happens to the person who's selling me the good? They're going to say, my gosh, I'm not moving cars, houses, land. I need to cut the price. Maybe induce people to buy it. Now the price drops some more. I say, oh, well, wow. If I thought it was going to fall 2%, so now it's fallen 5%, let me wait a little longer. Maybe I'll get it for 10% off. And there is a belief, and it has happened in the past, that you can get into these deflationary spirals that people stop spending, and if people stop spending, people stop producing, and if people stop producing, they lay people off, and then you actually go from a monetary question to a real product question, a real wealth question, because when people are not employed producing goods and services, society is creating fewer goods and services, and that's considered to be bad. And so this is why people say, oh, well, deflation's bad. Bitcoin is probably deflationary, so why wouldn't it be bad for the same reasons? Now, what do we mean by Bitcoin is deflationary? It means the price of Bitcoin goes up, right? Goes up relative to the unit of account, which reflects the price of all the goods and services. My theory is, and I think this is right, that to the degree that Bitcoin is not a national unit of account, it doesn't matter if it's deflationary, because this effect won't be triggered. So it's like saying shares of Apple stock are deflationary. Strictly speaking, they are. Every year the price goes up, which means the amount of things you can buy with a share of Apple stock goes up. right? Goods priced in Apple stock have deflation. So why hasn't this triggered a deflationary spiral in our economy? Well, it hasn't triggered a deflationary spiral in our economy because Apple stock is not the unit of account, right? You don't go to Best Buy and say, this TV is 1.3 shares of Apple stock, and the next day it's 1.25 shares of Apple stock. So, I'm going to hold on to my Apple stock and not buy this TV because tomorrow it's going to be one share of Apple stock, and you trigger the deflationary spiral. To the degree that Bitcoin is not a national unit of account, and I think it's not in any danger of being a national unit of account anytime soon, both due to its own characteristics, but also because governments are not likely to adopt a decentralized currency out of their control as a national unit of account. I don't think that the deflationary point is real. Like, if we're sure it's going to deflate, the other way to say it's, if you're sure it's deflationary, is you are sure the price is going to go up, which, by the way, a lot of people believe that, but you certainly can't be sure of it. And if that doesn't impact economy-wide deflation, I think it's a low-risk topic. Now, are 21 million BTC enough for everyone in the world? Let's say we have mass adoption and BTC is the main currency. Is 21 million enough so everyone can have an amount of it? People tend to want more and more, and rich want to become richer. Well, that's definitely true. So how will all this work? I think the question is a practical question. What if everyone has all the Bitcoins and we need Bitcoins to be a medium of exchange, let's say, and there are not enough Bitcoins around? Well, Bitcoin can be divided into Satoshis. And there are an awful lot of Satoshis. I think we are nowhere near any practical limit of where we're running out of Satoshis. And let's say we did, right? Let's say we got to the point that there were so many transactions that even the value of one Satoshi became too high to be practicable. Unlike the 21 million hard limit on Bitcoins, I don't think there'd be particular resistance to having micro Satoshis and micro Satoshis and micro Satoshis and micro mini Satoshis and adding more decimal points at the end. It doesn't change the store value aspects of Bitcoin. It doesn't change the game theory aspects of Bitcoin. It just allows lower denominations of Bitcoin in its currency function. It's like saying, we have $100 bills, can we exchange them for $10 bills? We have $10 bills, can we exchange them for $101 bills? We have $101 bills, can we exchange it for 400 quarters? We have 400 quarters, can we exchange it for 1,000 dimes? Can we exchange it for 10,000 pennies? And so on. If we ended up having half cents and we had 2,000 half cents, I think it's a bother anymore. So I think there's no immediate running out of Satoshis concern. And I think if there were, there is nothing particularly controversial about adding even finer refinements of at the sub-Satoshi level. Okay. Why is Bitcoin so highly volatile? What are the factors impacting its volatility? And can Bitcoin volatility be predicted to some extent and managed similar to fiat currencies? Well, can be predicted to this extent. I can predict that the Bitcoin price will be volatile. Not sure how helpful and actionable that is, but I think it's true. I think it's interesting to see why one would imagine Bitcoin would be volatile, right? And the first question is, well, why does Bitcoin have any value in the first place, right? It's not like a stock that produces a dividend, and based on that dividend, we're going to evaluate the dividend stream do some type of standard finance valuation and apply some multiple to it. It doesn't provide a dividend. And so since it doesn't provide a dividend, it doesn't provide cash flows, the only real value of a Bitcoin is how much value is there in being able to reserve part of the Bitcoin network, right? So what does it mean reserve part of the Bitcoin network? Let's say Bitcoin is useful for some things. It's useful because I want to, donate to WikiLeaks and they don't accept credit cards. It's useful because I want to do global settlement in a kind of machine-to-machine application and I need a permissionless currency to do it. It's useful because I want to swap it into some other permissionless currency and do yield farming or whatever we're doing these days. Whatever it is that it's useful for. It's useful because I'm escaping some type of oppressive regime and I don't want to cross a border with a bunch of diamonds in my pocket, right? Whatever it is you think Bitcoin is useful for. Well, in order to have that use, in order to reserve X units worth of that use, by X units, $1, $10, $100, $100 million worth of that use, well, you need $100 million of Bitcoin, or $10 million of Bitcoin, or $20 million of Bitcoin, or 20 cents of Bitcoin. So someone has to buy some Bitcoins to do those things. And so the valuation model, so to speak, is something like what are these uses and how many of them are going to be, and what will people pay for those uses in the future. And of course none of these can plug into any type of finance model and come out with an answer. So you can say, well, ballpark, if you were valuing a real estate building and a building in Manhattan, and you put 10 people to value it, I don't know, it might be a 1.5x difference between the high and the low value. Here, nobody knows, right? So two well-meaning people could have vastly different estimates of this piece. A. B, all types of things happen all the time. China bans Bitcoin. It's never really banned Bitcoin, but China bans Bitcoin. Oh, there's going to be less usage. People sell, right? The price should be lower. Oh, this retailer accepts Bitcoins. Oh, that's exciting. There'll be more usage. People buy. So the second piece is it's not stable yet from the perspective of we don't know how much it's going to be used, for what type of topics, under what permanent rules, in which countries. And as new data comes out constantly, people have changing evaluations of how successful it's going to be, and that affects whether they want to buy or sell it. The third piece is, as a currency, it's very thinly traded. Traditional currencies are probably the most traded instruments in the world. I mean, daily trading in euro dollars is something like $7 trillion a day. And so when you have a lot of trading and a lot of big counterparties on both sides, they tend to balance each other out. Here, there's not that much trading relative to the people who are doing the trading, and so when someone is trying to push the price around, up, down, left, right, or center, they have more ability to do it than if I decided I was going to try and move around the euro-dollar price. Well, good luck to me, right? Like, that's never going to happen. So those three things in aggregate are going to create volatility. Will that volatility continue? Yes, for a while. Is it less volatile than in the past? Definitely. I mean, it's extraordinarily volatile as a financial instrument, but earlier it was even more extraordinarily volatile. So it is logical to believe, as each of these factors progresses, you have more of a sense of what it'll be used for. The environment it lives in becomes more clear. There's more volume in trading. Volatility falls over time, but starting from an extremely high base of volatility. May you please elaborate on how Bitcoin is possibly commodity-backed? Yes. The answer to this is what I had mentioned earlier, the commodity in question is an abstract commodity. It's not a commodity you can just put your hands on like a piece of gold or a diamond. The commodity is the ability to do certain types of transactions. For some of the reasons mentioned earlier, and I can imagine 20 other ones. And there is no way to do those transactions, assuming you want to do them in Bitcoin, without buying a Bitcoin. And so you buy the Bitcoin to be able to have some, let's say, unseizable, no counterparty risk, but high volatility asset in your portfolio. Okay, well, to do that, you need to buy some Bitcoin. And what is it backed by? Its commodity aspect is that it can be moved around permissionlessly, more or less instantaneously around the world, and it has some initial network effects that a reasonable amount of people would buy it off your hands at some type of reasonable price relatively close to market in many countries around the world, right? So one of the examples that I thought made sense for me is if you were buying a seat on the New York Stock Exchange, you could be one of the traders of the New York Stock Exchange. That seat is a commodity. What does that seat allow you to do? It allows you to trade stocks, right? What does owning a Bitcoin, it gives you 1/21 of the ability to move things around on the Bitcoin blockchain. Or, and you see now there's interesting additional uses. Stake it as collateral to do other things with other cryptocurrencies and some of the more interesting things happening now. It's another theory that people say that it's energy, right? It's another common way to think about it, that people say, well, look, you had to solve all these calculations. You'll learn about it later. And those take electricity, and so it is a way to monetize and tokenize electricity. And the easiest way to think about this is, imagine you have hydropower in, I don't know, northern Iceland, and you have a lot of it. And, I don't know, 1,000 people live in your town in northern Iceland, and even if they leave the lights running all day, they can't use up all the hydropower. So the power being generated there can't easily be monetized. Now, it can be monetized to some degree. One of the things you will find in Iceland is aluminum smelting operations. Why? Because they use a lot of electricity. Electricity is cheap, and so it's a way to capture that inexpensive electricity by making aluminum that you then ship around and sell it. But even that cannot capture all of this lost energy. So you say, well, convert this lost energy into Bitcoins. And now you've converted into something that has monetary value that can leave northern Iceland and go wherever it wants. And I think that's true, but I'm not sure that's the commodity backing. I mean, it's not as if you buy a Bitcoin, you've bought energy. Like if I bought a Bitcoin, I now have some energy I can do something with. The commodity I get is the ability to move Bitcoins around. I think that point is very true, but in the upside down way. It's a way to, it is a mechanism to monetize excess energy without, I think, energy being the commodity that it represents. Someone asked, how can I obtain Bitcoin? Well, you can buy some on an exchange. You can get someone to pay you in Bitcoin for some product or service that you're giving them. Or you can be a miner, which is not trivial in 2020, which means you're really going to join a mining pool, and I hope your mining pool is successful at generating some Bitcoins. Why does the Bitcoin block reward subsidy have every 4 years? And someone in the comments now is saying, well, I still understand why it's 21 million. And let me answer the question generically, which I don't think it matters that it halves every 4 years. I don't think anything would be different if it halved every 3 years or every 5 years. Right? I think the interesting part is, why does it halve? Well, it halves because it has a fixed limit. So if it didn't halve, eventually you'd blow right past 22 million or 21 million, right? Whatever the rate of issuance was. If for the rest of eternity you had a fixed rate of issuance, you couldn't have a hard cap. So the rate of issuance has to shrink every year. And so they go to the question of why does it have a hard cap? And to understand why it has a hard cap, you have to go back to the beginning and say, I've invented a new private currency that nobody's ever heard of and is a bunch of gobbledygook about, magic internet money basically, and mining and solving puzzles and what have you. Hey, would you like to buy some of this from me? That doesn't sound like a very good proposition. And your first concern with any private money would be, isn't the central banker, me, going to inflate it away? So let's say I was issuing Polemitis coins, and this was pre-Bitcoin. And I said, well, I have Polemitis coins. They're wonderful. They have my face on them. I'm going to sell them to you for $10. So, would you buy those? Like, even if you said, like, they're useful, they do something. Isn't your first concern going to be that I'm going to be sitting there printing more of them, and I'm the issuer, and I'm printing more of them, and I'll sell you them for $10, and I'll say, oh, look, here's 100 more for me. Look, I've just made $1,000. So, a issuer of a private currency or private money has to somehow, that doesn't have any cash flows associated with it, right? Has to somehow give a credible promise that it's scarce. Because if it's not scarce, you'll never get the positive cycle going of the value goes up. You get more hashing power. With more hashing power, you get more security. The value goes up, etc., etc. You have to start with scarcity if you're a private issuer. So scarcity in Bitcoin comes from credible promises of scarcity come in two buckets. It's open source, community built, blah, 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 blah. I can't just decide, Antonis Polemitis, there's going to be 50 million Bitcoins and I've just issued myself 28 million, right? That's the decentralization solves one scarcity problem, that you're not relying on one trusted counterparty. The second way you promise scarcity is to literally promise scarcity. There'll only be 21 million, full stop. If you said there'll be 20 million or 50 million or 100 million, I don't know, we'll decide, we'll see. I think it's hard to get the cycle, a positive cycle going for a private currency. So I think that's in effect why you have the limit. And then if you have a limit, you have to have decreasing issuance to not hit the limit. Bitcoin will never be a medium of exchange until it is a medium of exchange. The question effectively is, the USD is a medium of exchange because it's being used as a medium of exchange. And BTC or cow shells or seashells won't be good medium of exchange until they're already being used as medium of exchanges. Yeah, I think it's broadly true, actually. Like there are network effects in medium of exchanges. And so a medium of exchange that is not broadly used is not really a medium of exchange. And you see, even in modern times, medium of exchanges appear in different contexts, right? Like in prisons, where you have this strange context, sometimes, cigarettes become a medium of exchange. And in that private context of a prison, cigarettes do become a medium of exchange because they might be better than the alternatives. Of course, in the world at large, US dollars are much more practical than cigarettes as a way to be a medium of exchange. And so the question is, can it be a medium of exchange? It has to go find some open space where it is not, the US dollar is not already a strong medium of exchange, or the euro or the yen or the yuan. It's not easy displacing a kind of national unit of account and a medium of exchange with strong network effects, which is why I think the progress on a medium of exchange has been much, much less than the progress on store of value. This question here that I'm going to answer quickly because someone asked, is Indian demonetization in 2016 an example of bad money drives out good money, and what are the foreseeable situations where BTC becomes good money? I actually don't think the Indian demonetization is that, to be honest, because what the Indian demonetization said is after a certain day, XYZ cash cannot be used. And theoretically, this was to catch tax evasion. And it caused a kind of major economic shock and a lot of chaos as everyone had to then figure out how to transact in what is a largely cash-based economy. Funny side note, I was flying into Delhi when the demonetization happened. I was literally in Dubai in transit, and I looked at my phone and I saw this and I was like, you've got to be kidding me. Like, how am I going to pay my tuk-tuk? Right? I had cash on me. Good money drives out, bad money drives out good money is more, if you have two coins, right, and one of them is fake and one of them is real, eventually everyone holds on to the real ones and tries to pass along the fake ones. And so eventually what happens is the only ones circulating are the fake ones. And so the bad ones drive out the good ones. I'm not sure that's what happened in India, right? Like, basically, if you could legally convert, you could legally convert, and then if you needed to, you couldn't legally convert, your cash got converted / laundered at a discount by people who had a way that they could legally convert it. So in a way, it might even be the opposite somehow. That their good money, certain types of bad money, got squashed on the head by the Indian government and were made into, traded at an actual discount to good money in terms, again, of rupees. It's a very weird experiment. I don't think it was a success in terms of how much disruption it caused relative to the benefits. But if I were an economist or a professor of economics, I'm very glad someone did it. It's a very interesting case study, and I think a lot of papers are going to be written about it in the coming years. But I thought it was a quite strange experiment to do in a country like India that still is a heavy cash-using country. Okay, I'm running about 4 minutes over, and I want to keep the model that we do finish on time. There's a couple of questions I didn't get to. I think maybe we can try and cover them in the forums. And so I'm going to wrap up today's session. For the next 6 weeks, we're going to transfer you to the very, very, very capable hands of Andreas Antonopoulos, and then we'll be back in week 7. So again, thank you all for joining. We're delighted to have you as part of the course, and this is a really great set of initial questions and a lot of engagement. And so please do stay involved, ask questions, come to the live sessions, be in the forums. I think it's the way everyone, including us, gets the most out of this course.